I grew up in Greenville, South Carolina, right on North Main Street. I did my undergraduate degree in politics at Washington and Lee University, and then I got my MBA in banking and corporate finance from Stern School of Business at NYU. Well, right out of Washington and Lee, I went to work for Michelin for a year. I was waiting on a slot to open up in the Marine Corps, and when it did, I went into the Marine Corps as an infantry officer for 4 years. Did 2 deployments. One was to Ramadi, Iraq in 2006, fighting a counterinsurgency. When I came out of the Marine Corps, I really did a search of what I wanted to do and where I wanted to be, and I saw a huge opportunity in the residential lending market for houses. At Lima One Capital, we provide financing on residential investment properties to investors who want to purchase and rehab these investment properties. And we consider ourselves a one-stop shop to where even if you don't have experience in the industry, you can come to us. We can kind of teach you how to do it and introduce you to people to find homes for you, to rehab the homes for you, and to sell the homes. So we provide a lot of value add in addition to the capital that we provide. Well, in 2006, prior to the meltdown, the financial industry meltdown, banks were doing this type of lending, community banks were doing this type of lending, really all the traditional institutional aspects of banking, they were lending on this product. And what happened was, after the crash, due to FDIC regulations, Dodd-Frank regulations, Basel III, the traditional banks got regulated out of the industry. So that opened up a huge opportunity for a well-capitalized professional company to come in and take their place. So we're a private company. Because we only lend on non-owner occupied investment homes, we usually stay outside of the traditional regulation that other banks face. And we've been able to come in, provide really professional service to these investors, unlike a lot of we have 308 competitors out in the country right now, throughout the country. And those guys, they're not well capitalized. They're usually 1 or 2 man shops, and they just can't provide the customer service that we can provide. I initially started the company in 2010 in Atlanta. In 2011, I really got a lot of large financing, and at that point, I missed my hometown. I wanted to come back to Greenville, and I really wanted to build our company in Greenville, so that's what I did. So at that point, in 2011, we were lending to only 2 states, Georgia and South Carolina. We quickly expanded to North Carolina, and then in July, we went through a recapitalization, and we launched to 6 new states and the District of Columbia. So right now, today, in 2014, we lend in Alabama, Florida, all the way up to Pennsylvania and Ohio, and we're getting ready to expand again later this quarter. Right now, everyone is seeking yield because interest rates are so low. From an investment standpoint, all the institutional funds are seeking yield. So that's one of the reasons why we're so attractive. If you look at our current portfolio, our loan to value throughout the entire portfolio is only 57%, and our interest rate is around 12%. So that is a very risk mitigated return for our institutional investors. In terms of residential real estate investors, one trend that we've seen 4 years ago, all of our clients, they were purchasing REOs. They were purchasing foreclosed homes, and the banks were really giving a lot of these away, and our clients were able to make profit on the acquisition. And that meant the construction wasn't as important. But now, 4 years later, the foreclosure wave has really come through, and there are not as many foreclosures out there, and most of our clients today are purchasing properties through MLS, and they're the highest bidder. So where our clients are actually making their money is in the actual construction, in the rehab. That's where their profits come from today. Well, to some degree, we are like a bank. We do lend a lot of money to residential real estate investors. We differ from a bank in several regards. Because we're not regulated, we usually close loans within 5 to 7 business days. Banks now are taking 4 to 6 weeks on average, but we're very efficient because we don't have to deal with the government in that aspect. We also don't take deposits, so we are a pure direct lender to residential real estate investors. In 5 years, we think there are 2 great opportunities for expansion. One is geographically, which we are continuing to do. We plan to go into Arizona, Nevada, and Minnesota later this year. And we also are trying to come up with a long-term loan product. If you look at the residential real estate investor market as a whole, there are two components of that. One is the short term, what we call flippers, the guys that are purchasing, rehabbing, and selling for a profit. The other much larger part of the market are people that want to buy homes and rent them out and act as landlords. So we're coming up with probably a 25 to 30-year long-term loan product to help those investors be able to be landlords and finance those properties as well. I think I'm most proud of, we're different in the fact of the types of people that we hire. We hire people based on their core values and core competencies. And since our founding, veterans have been the cornerstone of our company. My chief operations officer served with me as my company gunnery sergeant in Iraq. We have a U.S. Army Reserve communications officer acting as our director of operations. We have a former airman acting as our controller, and we have a former air traffic control Marine who is our first loan officer. So we really value veterans and what they bring to the workforce. They have a unique set of core values, and we train them to the actual industry-specific job that they fill.